Warren Buffett, how you should invest in 2023. Hello viewers, welcome to my YouTube channel. Today in this video, we will talk about Warren Buffett, how you should invest in 2023. Warren Buffett is widely regarded as one of the greatest investors of all time. One way to share in his success is to invest in his firm, Berkshire Hathaway BRKB. But is Berkshire a good buy for you now? Let's take a close look at the fundamental and technical performance of the ultimate Warren Buffett stock. Berkshire Hathaway is a conglomerate that owns some of America's most famous firms. It wholly owns the likes of Geico, Duracell, Dairy Queen, Fruit of the Loom, and railroad operator BNSF. Berkshire Hathaway is perhaps more famous for serving as an investment vehicle for Warren Buffett and his top lieutenant, Charlie Munger. Following their value investing philosophy, the company owns huge stakes in American Express AXP, Coca-Cola Co., and other heavy hitters. After transforming a couple $1,000s into billions using the stock market, Warren Buffett is widely viewed as one of the best investors of all time. Yet despite the massive levels of success, his investment strategy is actually pretty simple. In fact, Buffett just sticks to one golden rule when making investing decisions. And by following in his footsteps, I believe it's possible to unlock superior returns for my portfolio while keeping risk in check. But the definition of a Warren Buffett stock has evolved in recent years. Under investment managers Todd Combs and Ted Wexler, Berkshire Hathaway has been increasingly sinking money into tech. Berkshire Hathaway Week's portfolio buys TSM stock. In Q3, Berkshire Hathaway snapped up a big stake in Taiwan Semiconductor TSM, the world's largest contract chip maker. It is a big supplier to Apple APL, his firm's top holding. Warren Buffett opened up new positions in building products maker Louisiana Pacific LPX and Jefferies Financial JEF, a global investment banking and capital markets firm. Warren Buffett is also a player in the streaming wars, increasing his position in Paramount Global Para by 16%. The Paramount Plus streaming service is a small but growing rival to Netflix, Disney Plus, and Amazon Prime. According to its most recent 13 Fahrenheit filing, Buffett held steady on top holdings including Apple APL, Bank of America BAC, and Coca-Cola Co. Chevron CVX is another big holding. Warren Buffett buys Oxy stock. But Chevron is not the only way in which Berkshire has energy exposure. In fact, the firm has been making waves as it built an increasingly large share in Occidental Petroleum Oxy. In early March, it emerged that Berkshire had snapped up 91.2 million shares in oil giant Occidental Petroleum. It comes as the price of oil has been spiking amid the Russia-Ukraine war. Amid recent volatility, Berkshire bought another 5.99 million shares between Sep. 26 and 28, according to a Sep. 28 filing. The firm further bulked up its position in Q3 and now holds a 21.4% stake according to its most recent 13 Fahrenheit filing. Berkshire snaps up Insurer. In late October, Berkshire Hathaway completed the acquisition of Insurer Allegheny. The firm stumped up $848.02 per share in cash, which equates to a total equity value of about $11.6 billion. Allegheny, now a wholly owned subsidiary of Berkshire Hathaway, continues to be led by CEO Joseph Brandon. Berkshire announced it had received all regulatory approvals relating to the deal on October 14th, and it closed several days later. The deal represented a multiple of 1.26 times Allegheny's book value as of the end of December 2021. It was Berkshire's biggest acquisition in 6 years. Besides its main insurance business, Allegheny also owns a steel company and a funeral services firm, BRKB Stock Technical Analysis. Berkshire Hathaway stock has formed a consolidation pattern but is well below its buy point of 362.20, according to MarketSmith analysis. BRKB has just reclaimed its 50-day moving average, a bullish sign. It has also retaken its longer-term 200-day line, an important step. Berkshire stock currently sits 2.5% above this level. The golden rule. According to the Oracle of Omaha, the most important rule of investing is to never lose money. Obviously, that's easier said than done. And taken at face value, it's a bit hypocritical, given he's seen billions get wiped off his portfolio in the past, like in 2008 and, more recently, in 2022. However, this rule isn't about never buying an underperforming investment. That would be impossible. Instead, it's reiterating the importance of only investing in companies with a high probability of success. Take a preclinical biotech stock, for example. The company may claim to have a revolutionary cure for cancer, but until it can make it through the clinical trial process, the revenue stream is non-existent. That makes it entirely dependent on external capital that has a habit of disappearing if the slightest negative result emerges. It's why more than 90% of these businesses go bust. Finding long-term winners. Not going bust is one thing, but delivering good returns requires more than simply having enough capital to survive. After all, we've seen industry leaders get dethroned countless times by competitors with few resources at their disposal. Don't speculate, invest. It's a well-known fact that Buffett missed the entire dot-com boom and subsequent bust of the early 2000s because he refuses to speculate. Speculation is when you aim to benefit from price movements which could go either way and which you don't fully understand. Buffett couldn't understand why a company that's bleeding $50 million a year should be worth $1 billion on the bourses. So he stayed away. The rest is history. In 2023, avoid speculating in the latest fads. Look at what happened to crypto investors who bought into the frothy rally last year. They are sitting in losses that they may well never recoup. Cheap doesn't necessarily make it worth buying. Buffett once famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Just because a stock is available for ours, 10 and another one for ours, 2,000 doesn't make the former more lucrative. In 2023, this would apply especially to a lot of tech IPOs that have fallen well below their issue prices. Remember that simply the fact that they are cheaper doesn't mean you need to rush into them headlong. Cash is a position too. This is something that people find it hard to wrap their heads around. Buffett believes that you don't necessarily need to be invested all the time. Oftentimes, you'll either not find enough time to research stocks, or you may just feel that there's no worthwhile opportunity available now. At such times, it may just make more sense to stay invested in cash funds instead. The converse applies too. When market fall and stocks become cheap, don't be shy of deploying the cash aggressively into quality stocks. Know why you're investing. Ask most retail investors why they just invested in a certain stock or mutual fund, and chances are they'll be clueless. That's akin to digging your own grave when it comes to stock market investing. Sure, some of these stocks will go on to make money, but it's essential that you recognize that this was a chance outcome more than anything else. Before you invest in a stock, understand that you're investing in a company more than anything else. That company has a business model, a marketplace, a management team, and a balance sheet. Eventually, how the company does will determine how your stock does. Take time out to understand it. Sell at the right time. Obviously, there's no magic formula to determine the best time to exit an investment. But here's a general guiding principle: think long-term, at least 5 years or more. However, follow your portfolio companies closely. If one or more reasons why you invested in the first place changes, consider an exit. For instance, you may have invested keeping in mind the strength of the management team, and the top management goes through a mass exodus. So this was our today's video. I hope you all liked this video. Don't forget to hit the like button and subscribe my channel, and also share it with your friends and family. We will be back soon with a new video. Till then, keep supporting and take care.